Our next call comes from Jerry in Vancouver. Good afternoon.
Good afternoon, gentlemen. David, can you just quickly maybe give me a view on Cisco? But before you do, can you please tell me the size of the stock market versus the bond market? Like, what's the difference in terms of size or value? Thanks very much. And Cisco, just tell me what you think of it going forward.
Sure. So the thing to know is that the bond market is many, many times the size of the stock market. It's especially bigger today than it was 5 years ago, as governments have issued so much debt. So on Cisco, our approach is find the leadership themes in the market. And one of the themes is that corporations are full of cash. They don't need to build capacity. They are looking for productivity. The one place corporations are spending is on technology. So that's the first thing. Technology sector breadth is expanding very steadily. It's one of the best performing groups in the market. Within technology, there's a bunch of different camps. One of the core themes that investors have been focused on is some of the larger, more established, mature businesses that are really cash flow machines, and Cisco can fit into this camp. It's not a high growth company like it was at one point. They just have a very strong balance sheet with very steady cash flow growth, buying back shares and increasing their dividend. So, Hewlett-Packard fits into this camp, and Microsoft fits into this camp, and Cisco fits into this camp. It's had a great move from 22. It's making new highs. I would expect that we likely have a pretty strong market headed into year-end for technology. I don't think Cisco would be my number one choice. The one thing that is positive, they do have a fair bit of exposure to data centers, which are enjoying secular growth and demand. And there's secular growth in data usage. I would prefer a Microsoft. I would prefer an Intel within this theme, but you're not going to get hurt here. I'd have no problem owning the stock.
Thank you, Jerry. Next up, David in Truro, Nova Scotia. Hello, David.
Hello. Thanks again for taking my call.
Sure.
My question is on Dow. I'm ahead a little bit. It seems to be teetering around that 47, 46, and then up into the 52, 3 range. And I thought that looked pretty promising, but it's kind of just drifting sideways. I would like to have your opinion on going forward, or would you have a better pick in your top picks, or what would you hang on to it or sell it? Thank you.
So, David, ultimately for chemicals, one of the big input costs, or the biggest input cost, is natural gas, and we know natural gas prices have been very weak. Dow Chemical is a company that benefits when the economy is a little bit stronger, so they do a little bit better. It does concern me the way that the chemical stocks sold off in October. They did get hit pretty hard. I think that one of the concerns out there is that commodity prices really across the board have been pretty weak. And so chemicals ultimately may wind up fitting into that camp. But, you get paid a 3.2% dividend. I wouldn't want to see it dip much below $50, so I would probably use that as a stop. If I was looking at that, I would like to see it make a new high, trade through $55. Strong U.S. dollar tends to be harder on chemicals producers. And of course, we got a very strong dollar right now. So I would be neutral to positive on it. I think there may be better names.
Let's head into Oriented Strand Board, shall we? Robin's in Berman Lake, BC. Hi, Robin.
Hello there. Last February, I bought Norbord in hopes of diversifying a bit and also getting the dividend, which attracted me. Now I'm getting a little concerned. What do you think next year is going to bring me? Thanks kindly. I'll hang up and listen.
Well, anytime you're getting a 10% dividend, you have to ask the question why. The company is not earning the dividend. On a Norbord, is not behaving well at all. And if you look at the forest stocks in general, they're behaving pretty well. You can look at a Weyerhaeuser in the U.S., which is a REIT that pays 3.3% and is growing its dividend nicely. It's specifically lumber. You can look at an International Forest, which I think looks quite good. We own some of that. We also own some Western Forest. Those companies really benefit when the Canadian dollar is a little weaker versus the U.S. dollar. Certainly the housing market in the U.S. has been improving. And so the forest stocks have been improving along with them. So I'd prefer to focus more on the lumber. Norbord's just really underperforming the group.
And how optimistic are you about another leg up in U.S. housing, or is it going to take a while? Will it be incremental?
Well, look, things are slowly and steadily getting better. and the consumer is on a good footing. I think that the people who worried about a substantial backup in interest rates are wrong. There is disinflation all around the world. It's highly unlikely that that's going to happen. So I think mortgage rates are going to stay low. We have been more focused on the companies supplying renovations. So like Home Depot or Lowe's have been doing particularly well. Home Depot was a top pick, I think, the last time I was on. But I think the consumer is in a very good spot. And I know everyone looks backwards at all the trouble we've been through over the last few years. Mm-hmm. But really, anytime you have falling inflation and you have a strong U.S. dollar, it tends to be very good for the U.S. consumer. And we're seeing it. The last thing I'd say is that when you get a big drop in the price of oil like we've had, people expect to see it in the numbers right away. Mm. And it takes time to work its way. It's like an interest rate cut. It takes a couple of quarters to start flowing into economic data. And we've had an enormous drop in the price of oil. So today, GDP's print was well ahead of expectation. I think you're going to start seeing a bunch more very positive economic data points, which is probably good ultimately for especially the U.S. economy.
Very good. We'll take a break here and come back with past picks from David Burrows.